Okay, so the main takeaway from the discussion last time, class, would be our expanded definition for investments and withdrawal transactions. Because once you are able to classify the transactions between the home office and the branch as a withdrawal or an investment transaction, we would know what to do with the reciprocal accounts. Meaning, if we have already classified the transaction as an investment transaction, we know that it should cause the reciprocal accounts to increase. If we classify a transaction between the home office and the branch as a withdrawal transaction, then the reciprocal accounts should decrease. And the investment in branch account increases with a debit and decreases with a credit. While the home office account, being a capital or equity account in nature, increases with a credit and decreases with a debit. Okay. But also do not forget the other two transactions affecting your reciprocal accounts class. The profit or loss of the branch. Profit increases both reciprocal accounts, losses decreases the reciprocal accounts. I want us to continue with problem 7 first, just to practice our use of our expanded definition of investment and withdrawal. I believe I have given this as an example before. The collection of, this is a new transaction. The collection of a 500 peso branch receivable by the home office should be recorded by the branch with the following entry. Do you have the same problem in your textbook? Okay. 5,000. The question now is, how should this be recorded by the branch? Since this is from the perspective of the branch, we know that the reciprocal account that is involved here would be the home office account. Now, how are we going to view this transaction? Who actually made the collection class? Who actually received the cash from this receivable? Home office. Okay, but whose receivable is it? The branch. So it's as if something from the branch was taken by the home office. Okay, receivable of the branch was collected by the home office. Who ends up receiving cash? It's the home office. Okay, but whose assets are reduced? The branch, because the receivable will cease to exist because it is already collected. It is no longer collectible. So as far as we are concerned, this would be considered as a withdrawal transaction. And again, once we have identified it as a withdrawal transaction, we know what its effect would be on the reciprocal accounts. And that would be the reciprocal accounts will decrease. Okay? And since the reciprocal account involved here is the home office account, we know that the home office account will have to be debited. The challenge on our part now would be to figure out what account will be credited. Many students would think that the account to be credited would be cash. But that is simply incorrect because the cash did not come from the branch. The asset that gave rise to the cash came from the branch, but the cash itself did not come from the branch. From whom was the cash received from class? It was from the customer. So it's not the cash of the branch per se that was reduced, but what was reduced as far as the branch is concerned, class? It's the receivables. Okay, because it was already collected by the home office. Do you think the branch can still collect that amount from the same customer? Not anymore. So the account receivable should be recognized. So our entry here would be debit home office and credit accounts receivable. Let's have problem 7. Okay, problem 7 is really an application of our expanded definition. The home office allocates monthly depreciation to the branch. What problem did they say? 6. The one before 7. 7. So this time we are 6. Okay. The home office allocates monthly depreciation to the branch and the branch's fixed assets kept on the home office books. Okay, the April depreciation amounts to 7,500. The branch should record this allocation by the following entry. Okay. Now, this is again really more of a stretch already of our definition class. But first takeaway here is what to do if the uh, fixed assets of the branch are kept in the books of the home office. Okay, so what does that mean? The recognition of the asset happens in the books of the home office. So who will maintain the asset account? It will be the home office. Who will maintain the accumulated depreciation account? It will be the home office. Okay, but who benefits from the use of the asset class? It would be the branch. So it is only right that the expense should be attributable to the branch. Okay? But who actually shoulders this expense? It is the home office. Why? Because it's the home office who essentially paid for this asset. Since the asset is recognized in the books of the home office. Okay? But again, you ask yourselves, whose expense is this? This is the expense of the branch. Why do we say this is the expense of the branch? Because it is the branch who benefits from the use of the asset. Okay, but who was previously shouldered the burden on this expense? It is the home office. But whose expense is this actually? This is the actual expense of the branch. So if we are going to fit this in our expanded definition class, it's as if the home office did something for the benefit of the branch. So we will treat this or classify this as an investment transaction. And from whose entry are we being asked of, class? The books of the branch. So what reciprocal account is involved here? The home office account. And again, we are treating this as an investment transaction. So we know that this should result in a credit to your home office account. And what do you think should be the debit? The debit here should be the expense that is allocated or assigned to the branch. So your complete entry here would be debit, depreciation, expense, and credit, home office. What do you think would be the entry in the books of the home office class? Since we have already identified that the home office account is credited, what do you think will happen to the investment in branch account? It will be debited. So debit, investment in branch. What do you think would be the credit? The credit here would be depreciation expense. Because it was the home office who recognized the expense first, but we've realized that this expense should be assigned and allocated to the branch. Okay. By the way, going back to problem 7, what would have been the entry in the books of the home office for the collection? Since the home office account was debited, what do you think will happen to the investment in branch account? Credited. Now, what do you think would be the debit? It should be obvious that it is cash. Why? Because it is the home office who actually received the cash. So the entry in the books of the home office for problem 7 would be debit, cash, and credit. Investment in branch. Let's have problem 5. If all fixed assets are kept on the home office books and the branch purchased equipment for 50,000 cash, the appropriate journal entry for the branch is, let's just prepare the complete entry. What's the scenario here? The assets are to be maintained in the books of the home office, but who pays for the asset class? It is the branch. But whose assets would be enriched? Whose books would be enriched? Whose assets would appear more, class? It would be the home office. But who paid for it? The branch. So it's as if the branch doing something for the benefit of the home office. The branch giving something to the home office. And if that is the case, we will consider it as what kind of transaction? Withdrawal transaction. And if it's a withdrawal transaction, what will it do to the reciprocal accounts? Increase or decrease? Decrease, withdrawal, decrease. Okay? And what reciprocal account is involved here? It would be your home office account because we are asked for the entry in the books of the branch. Since it is a withdrawal transaction, what do we do to the home office account? Debit. And since it was the branch who paid for it, obviously the credit here would be cash. Then you would ask, what was the payment for? It was for an equipment. Why are we not seeing the equipment in the entry for the books of the branch? Because again, the problem has explicitly told us that all assets, fixed assets of the branch are to be recorded in the books or are to be maintained in the books of the home office. So it would make sense that the no equipment will be involved in the entry of the books of the branch. So the complete entry in the books of the branch would be debit, home office, and credit, cash. What do you think would be the entry in the books of the home office? Since we already know that the home office account is debited, what will happen to the reciprocal account in the books of the home office? Credited. So our entry in the books of the home office will have a credit to investment in branch. Now, what do you think would be the debit? It will now be the equipment that is to be used by the branch. Is that all right? Yes, because again, that is the arrangement that the assets of the fixed assets of the branch are to be maintained in the books of the home office. Okay, but you can just add dash branch to uh, distinguish it from the other assets of the home office. So your entry here would be debit, equipment, branch, and credit, investment in branch. Okay, let's proceed to problem 8. The question in problem 8 is, what is the correct home office account balance on the records of the branch? So basically, class, you're asked to follow and monitor the balance of the home office account. And remember, what are the 4 transactions that will affect the balance of your home office account? Investments, withdrawals, profits, and losses. Okay. So let's go over the transactions here. Luzon Corporation starts a branch operation in a nearby town. Okay, and what did the home office do? It sent merchandise costing 80,000. It shipped to the branch along with equipment costing 50,000. So let's start from the perspective of the branch. Okay, the branch received 2 items from the home office, correct? Inventory and equipment. Okay, but since we are using the periodic inventory system, class, we will not debit inventory for the receipt of the merchandise shipped by the home office. What account title will be used? And this is the this is the third new account title that you are introduced to. The first 2 are home office and investment in branch. The third new account that we are encountering in this subject would be shipments from home office. Okay? Your shipments from home office, class, is basically a temporary account also that essentially serves the same purpose as your purchases. But what's the difference? Purchases are for those goods that you have acquired from outside parties. Your shipments from home office are obviously for goods that you have received from the home office. But what do they represent? They represent an inflow of inventory or goods. What else did we receive? Equipment. So our debits here would be debits, shipments from home office, and equipment. Shipments from home office for 80,000 and then equipment for 50,000. Again, just to clarify, why are we not debiting inventory for the receipt of the merchandise, class? Because again, we are using periodic. Okay, under the periodic inventory system, we do not charge the fluctuations to your inventory balance to your inventory account. Okay. And then what would be the credit? Again, what kind of transaction is this? The home office giving something to the branch. What kind of transaction? Investment. So what does an investment transaction do to your home office account? Increase. So the complete entry here would be debit. Shipments from home office, 80,000 debit. Equipment, 50,000, and credit. Home office in the amount of 130,000. Is that the answer here? No, because there are still other transactions affecting your home office account. But before we continue, let's try to determine the entry that would have been prepared by the home office in the books of the home office. What did the home office do? Transferred equipment and merchandise. Okay? We already know that the home office account was credited. What do you think will happen to the investment in branch account? Debit. And what do you think would be the credit? It would be the items that were given to the branch. Okay, so one of our credits would be equipment. Okay, but our second credit class would again be not inventory because again we are using periodic inventory system. Our second credit would be shipments to branch. Okay, so I hope you do not get confused. Who uses the shipments to branch account? The home office or the branch? Home office. And when does the home office use that? Every time it ships goods to the Branch. Who uses the shipments from home office account? Branch. So where can you find the shipments from home office account? You can find it in the books of the branch. When does the branch use the shipments from home office account? Every time it receives shipments from the home office. Okay? Because again, that will also have an impact on the computation of the cost of goods sold of the home office and the branch. Okay, next item here, during the initial year, the home office assigns 8,000 in expenses. So whose expenses are these? These are the expenses of the branch. But who paid for it? It is the home office. So we will treat this as an investment transaction. So what would be the entry in the books of the branch? Debit, expenses, and credit, home office. I hope I do not have to elaborate every time why we are crediting and debiting your reciprocal accounts. Again, we are treating this as an investment transaction. What do you think is the entry in the books of the home office? Since you already know that the home office account was credited, then it would result in a debit to the investment in branch. And what do you think would be the credit? The expenses that were assigned to the branch. So debit, investment in branch, and credit, expenses. Okay? So take note, we already have two entries that have affected your home office account. Next item. The branch sells 70% of the inventory that it received for 80,000 and remits 40,000 in cash to the home office. Is there any part of this transaction that will affect our reciprocal accounts? Yes, the remittance of 40,000. How do we classify this transaction? The branch giving cash to the home office. Withdrawal. And what does a withdrawal transaction do to the reciprocal accounts? Decrease. So what do we do with the home office account in this case? Debit or credit? Debit. So debit home office, and what do you think would be the credit in the books of the branch? Cash. Debit home office and credit cash in the amount of 40,000. What do you think would be the entry in the books of the home office? Debit, cash, and credit, investment in branch. Why are we debiting cash? Because the home office received cash. Why are we crediting investment in branch? We are essentially taking something from our investment in the branch. Okay, we are treating this as a withdrawal transaction. Okay, so far what do we have? We have credited home office by 130 for the investment. We have credited home office also for the expenses. Okay, but we have debited home office for 40,000. How much then would be the balance of your home office account from those three transactions? 98,000. But again, what are the transactions affecting your reciprocal accounts, class? Investments, withdrawals, profits, and losses. What does profit do? Increase. What does loss do? Decrease. So, the question now is, if our answer here is 98,000, why are we not adding the profit or deducting the loss, class? Didn't we say that profit or loss affects home office account? Didn't we say that profit and loss affects the reciprocal accounts? Why then are we not adding or deducting the profit or loss? Because of the last sentence in the problem, class. What does it say? Closing entries have not yet been made. Because how do we reflect the profit or loss into the home office account, class? How does the profit or loss become part of your equity account? Only after it has been closed. So if closing entries have not yet been prepared, what does that mean? Profit or loss or the income summary has not yet been closed to your equity account. Okay? But are you supposed to add profit and deduct loss, class? The answer is yes. Okay, but why are we not doing that in this problem? Because closing entries have not yet been prepared. That means the profit or loss have not yet been closed to your home office account. Okay? So I'm telling you now, this problem will come out in our exam next week, but I will change it, class, wherein closing entries have already been prepared. So will your answer still be 98,000? The answer is no. What should you do? You should compute for the profit or loss. If it results in a profit, then you add the profit to the 98,000. If it results in a loss, then you deduct the loss to the 98,000. Okay, I'm telling you now, this problem will come out and I will be changing it so that you will have to add or deduct the profit or loss. Is that clear? Okay, so let's try to do that. What do we need to solve for profit class? Sales, cost of goods sold, and expenses. Are we given with our sales in this problem? Yes. Okay, the branch sells 70% of the inventory it received for how much? 80,000. That would be your sales revenue. Is that clear? Okay, next, what else do we need? Cost of goods sold. How much is our cost of goods sold? What did the problem say? 70%, correct? 70% of what? The inventory we receive. How much inventory did we receive? 80,000. So you multiply 70% with 80,000. Now, this is the problem with students' class. They will be told that you multiply 70% with 80,000. They do not understand which 80,000 it is to be multiplied. How many 80,000s do you see in this problem, class? Two. The first one being the value of the merchandise given to the branch. And the second 80,000 is the amount of our sales revenue. Okay? And which of the two 80,000s do you think are we multiplying the 70%? The amount of the merchandise given. Okay? So we multiply the 70% with the 80,000. But the 80,000 we are referring to here is the first 80,000. I hope everyone is on the same page, class. Okay? It would have been different if it says that the cost of goods sold is 70% of sales. Then the 70% would have been multiplied with the second 80,000. But what did the problem say here? The branch was able to sell 70% of the inventory. Okay, so we are multiplying the 70% with the first 80,000. Okay, so again, will this problem come out in our exam? Yes. What will I change? The closing entries will already be prepared. What else will I change? I will change the amount of inventory shipped and I will change the amount of sales revenue so that the amounts will be different. So that I will know whether or not you know to what amount should the 70% be multiplied. Again, we have discussed it already. To which 80,000 are we multiplying the 70% plus? The amount of inventory. So it does not matter whether I change it or not. You should know where the 70% should be multiplied. Is that clear? Okay. So sales of 80,000. How much is the cost of goods sold? The 70% of the 80,000 shipment, 56,000. So 70,000 minus 56,000, that will give you 24,000, correct? Then you have expenses of 8,000. So 24,000 minus expenses of 8,000, that will give you a net profit of 16,000. What does profit do to your reciprocal accounts? Add, increase. Okay, so what do you think would be the entry in the books of the branch class? Debit, income, summary, and credit. Home office in the amount of 16,000. What would be the entry in the books of the home office? Debit, investment in branch and credit, branch income in the amount of 16,000. So how much then would be the updated balance of your reciprocal accounts? It would be the 98,000 plus 16,000. That will give you 114,000. That would be the answer if the same problem and closing entries are already prepared. Okay, but what will happen in our exam? Closing entries will be prepared, but I will be changing the amount of the shipment and the sales revenue. Is that clear? Now, I've discussed what will happen during the exam. I've told you what will be changed. But for some reason, students will still get it wrong. And when they get it wrong, they will blame the subject class. But is it really the fault of the subject? No. Is it even the fault of your basic accounting? Not anymore, because I've told you what will happen. I honestly don't know whose fault it is anymore. Okay? If you get this wrong, you should not forgive yourself. Let's skip 12-9. Let's proceed to 12-10. Problem 10. In problem 10, class, the question here is, on January 1, 2017, am I correct? What are the balance of the following accounts in the books of the Home Office? Okay, but what information is given to us? What date? Last sentence of the first paragraph of the problem. On December 31, 2016, the branch book shows the following balances. Okay, so whose records are being shown here, class? It's the records of the branch. And what is being asked here? Uh, the balance of your investment in branch and shipments to branch in the books of the Home Office. Okay, so we're given with the records of the branch, but we are asked for the balances that are found in the books of the Home Office. Is this problem answerable, class? Yes, because what do we know? Ideally, your reciprocal account should have the same balance. Okay, they should have equal balance. So even if we are just given with the records of the branch, from the records of the branch, we can know how much the balance of the Home Office account is, and we know that whatever is the balance of the Home Office account, that would also be the balance of your investment in branch account. Okay, let's try to check now the records being shown from the books of the branch. Do you have their cash? How much, class? 8,500. Do you have their home office? 35,000. Okay. So how much is the balance of the home office account in the books of the branch? 35,000. And what did we establish earlier? Supposedly the balance of your home office account should also be the balance of your investment in branch account. Okay? But why is the answer in this problem not 35,000 plus? Why is the answer in this problem not 35,000 when we are already given in the problem that the balance of the home office is 35,000? Aren't they supposed to have the same balance? Yes, but why is the answer here not 35,000? Because the 35,000 is as of December 31, 2016. Okay, but what is being asked here? The balance as of January 1, 2017. Now, isn't the ending balance of the previous year supposed to be just the same as the beginning balance of the following year? Yes, but why are we saying that they are not the same? Why are we saying that the December 31 balance here is not representative of the should be balance for January 1 of the following year? Because what happens in between, class, December 31 and January 1? Closing entries will be prepared. So what could be the possible difference here? What could be the possible defect of this 35,000 balance? This 35,000 balance of the home office account still does not incorporate the profit or loss. If it's the beginning balance of the next year, should it already reflect the profit or loss of the previous year? Yes. So that's why we cannot rely on this 35,000 because this was before the profit or loss was close to the home office account. Okay? But again, should the home office account and the investment in branch have the same balance? Yes. But why are we not relying on the 35,000? Because that is still the balance on December 31 before closing entries. What is being asked is the January 1 of the following year. And if it's already the following year, that means the closing entries were already prepared. What does that mean? Profit or loss have already been closed to your reciprocal accounts. Is that clear? Now, how are we going to be sure that the 35,000 plus does not include yet the resulting profit or loss? Why are we sure that the 35,000 is not yet inclusive of the resulting profit or loss? Because if it's December 31 class, it's possible that closing entries have already been prepared. Because when do you prepare the closing entries? At the end of the year. But why are we saying that this 35,000 is not yet inclusive of the resulting profit or loss? Why are we sure that profit or loss has not yet been closed to the home office account? What happens if closing entries are already prepared, class? Nominal accounts are closed. They will have a balance of, but based on the records being shown to us, do you still have nominal balances here? Do you still have temporary accounts? Yes, you have sales of how much? 147, and you still have expenses of 13,500. So since these records still have a balance for our nominal accounts, this tells us that closing entries have not yet been prepared. Okay, so what then is lacking for our 35,000? We need to compute for our profit or loss. Okay, so where do we begin in computing for profit or loss, class? Sales given. Is it given? Yes, in the amount of 147,000. What are we going to deduct? Cost of goods sold. Is it given? No. Can it be solved? Yes. How do we normally solve for cost of goods sold? Debit? Sorry. We start with beginning inventory plus purchases minus ending inventory. But because we have been introduced to one new account, class, we have been introduced to shipments from home office. These should form part of your goods available for sale. So our computation now should be beginning inventory plus purchases, if any, plus shipments from home office, if any, less ending inventory. Do we have beginning inventory in this problem? No. Why are we sure? The problem states that this branch has been operating only for a year. Okay, so beginning inventory 0. Do we have purchases? No. What do we have is our shipments from home office. So all goods that we have came from the home office. So how much is our shipments from home office? 135,000. Then deduct ending inventory. Are we given with that amount? Yes, the problem tells us that the branch inventory on December 31, 2011 is 18,500. Okay, so 135,000 minus 18,500 will give you 116,500, and that would be our cost of goods sold. So you deduct 116,500 from sales of 147, that would give us 30,500. And how do we call this 30,500? Gross profit. And what do we do when we already have our gross profit? Deduct your expenses. Are we given with our expenses? So 30,500 minus expenses of 13,500, 17,000. Is that a profit or a loss? Profit. And what does it do to our home office account? Increase. So debit income summary, assuming you've already closed your sales and your expenses and your shipments from home office, and credit home office in the amount of 17,000. Once that is done, how much then would be the balance of your home office? 52,000. And what do we know? Whatever is the adjusted or correct balance of your home office would also be the balance of your investment in branch. So we know that our answer here would either be A or B. So the question now is, how much will be the balance of your shipments to branch? 0. But didn't we have shipments, class? Yes. How much was the shipments? 135,000. But why will it be 0? Because again, what is being asked? As of January 1. When did the shipment happen? Last year. By the start of the next year, what will happen? It will start at 0. Okay? So that's why the answer here would be letter A. Let's proceed to problem 11. For problem 11, class, this is just basically an application of your basic accounting equation, which tells us that assets is equal to liabilities plus equity. And since we do not have any liabilities in this problem, assets would be equal to your equity. Or in this case, assets would be equal to your home office account. So what are the assets on hand? Petty cash fund of 6,000. January 1 first. Petty cash fund of 6,000. And then accounts receivable of 86,000, and then inventory of 74,000. If you add those three, you would get 166,000. For the following year, class, basically what this problem is asking us to do is whether or not we know how to compute for the ending balance of your accounts receivable, because your petty cash fund will remain at 6,000. Okay, I hope you get that, class. Okay, and we are already given with the ending balance of our inventory. And the ending balance this year would just be the beginning balance next year. So the only challenge for us in this problem is to determine the ending balance of your accounts receivable. So We start with the beginning balance. How much is the beginning balance of your accounts receivable? 86,000. How much sales did we have this year? 390. Okay, so 86 plus sales of 390. And then, did we have any collections this year? Did we have any collection? All cash collected, amounting to 378. Will collections affect receivables? Yes. Okay, so uh, 86 plus 390 minus 378. That should give you the ending balance of your accounts receivable. How much would that be, class? 98,000. So we have everything we need for the second year. Petty cash fund of 6,000, inventory of 82,000, and ending receivable of 98,000. How much will that give us? 186,000. Okay, so again, the only challenge here is for us to compute for the ending AR. And is that something that is supposed to be discussed only in this subject class? The answer is no. Okay. Let's have problem 12. The question in problem 12 is, what is the adjusted balance of the reciprocal accounts? And what is given? We're given with the investment in branch. How much is the investment in branch there? 38,600. Okay, and how much is the balance of your home office? 21,320. But what did we say before? That supposedly they should have the same balance. They should have the same amount. But the problem is, because of timing errors, class, in the preparation of entries, the respective books of the home office and the branch are not in sync. They are not equal. Okay? So the problem gives us additional information that will try to explain the discrepancy, class. Okay? We're given here with three information. Number one, on December 26, the branch remitted 10,400 in cash to the home office that was not received until January 3. Will this affect the reciprocal accounts? Yes, because again, this is treated as a withdrawal transaction. Now, who do you think between the branch and the home office was able to prepare an entry? Branch. Okay? And who was not able to prepare an entry? Home office. Why are we sure that the branch was already able to prepare an entry? The transaction originated from the branch because it's the branch who gave the cash. Okay? But why are we sure that as of December 31, the home office was not yet able to prepare an entry? Because at that time, the home office has not yet received the cash. Okay, it would be the receipt of cash that would trigger the preparation of the entry. Okay, so again, who was able to prepare an entry? Branch. Okay, who was not able to prepare an entry? Home office. But should the home office have prepared an entry? Yes. Okay, but first, what do you think was the entry prepared by the branch? What entry do you think was prepared by the branch? What kind of transaction is this? Withdrawal. Okay, so what do you think would be the entry? Debit, home office, and credit, cash. Okay, but again, as what we've mentioned, the home office has not prepared an entry. What entry was not prepared by the branch on time? The receipt of the cash. What do you think would be the entry? Debit, cash, and credit, investment in branch. What does that entry do to the investment in branch account? Does it increase or decrease? Decrease. Since that entry was not prepared, class, that means the 10,400 was not yet deducted from the 38,600. So you should be deducting the 10,400 from the 38,600. Number two, merchandise that was billed to the branch at 7,280 was in transit at December 31. Okay, does this affect the reciprocal account? Yes, this is an investment transaction. Okay, who do you think was not able to prepare an entry? Who was able to prepare an entry? Home office. Why are we sure the home office has already prepared an entry? The transaction started with the home office. It was the one who shipped the merchandise. Why are we sure the branch has not yet prepared an entry? Because the branch has not yet received this merchandise. How do we know? The problem said the merchandise are still in transit. So what do you think was the entry prepared, correctly prepared by the home office? Entry. What kind of transaction is this? Investment. So what would be the debit? Debit, investment in branch, and credit, shipments to branch. in the amount of 7,280. Was that prepared? Yes. So that means that amount is already incorporated in the 38,600. Who was not able to prepare an entry? The branch. What entry was not prepared by the branch? Debit, shipments from home office, and credit, home office. Okay, but again, that entry was not prepared. So that means the increase of 7,280 is not yet incorporated in the 21,320. Does everyone follow the 21,320 I am referring to, class? The one given in the problem. So what do? We add the 7,282. We add it to the 21,320. Plus, please take note, class, under normal circumstances, the shipments to branch should be a credit, while the shipments from home office should be a debit. Number 3, a cash payment of 400 and an open accounts receivable was received by the home office. The account, however, was carried on the books of the branch. The home office did not notify the branch of the cash collection. Does this affect our reciprocal account? Yes, because the home office collected something that belonged to the branch. How do we classify this transaction? Withdrawal, the home office taking something from the branch. Who was able to prepare an entry in this case? Home office. Who was not able to prepare an entry? How do we know? The home office has not yet notified the branch. So there is nothing that would trigger the branch to prepare an entry. What entry was correctly prepared by the home office? Debit, cash, because the home office received cash, and credit, investment in branch, because again, we are treating this as a withdrawal transaction. Okay, what entry was not prepared by the branch because it was not notified by the home office? Debit, home office, and credit, accounts receivable in the amount of 400. So that entry will result in a decrease to the home office, correct? But since that entry was not prepared, the 400 was not yet deducted from the 21,320. So to correct that one, we will deduct the 400 from the 21,320. Okay? So we can now determine the adjusted balances of both. Let's begin with the investment in branch, 38,600. What adjustments have we identified for the investment in branch account, class? Only the 10,400. Okay, so 38,600 minus 10,400 would give you 28,200. Let's see if we can also arrive at the same amount for the home office account. We start with 21,320, and then what do we do with the 7,280? Plus or minus? Add. And then what do we do with the 400? Add or deduct? Deduct. So 21,320 plus 7,280 minus 400 will give you how much? Okay. So once you have correctly accounted for all the uh, intra-company transactions, class, you should have the same balance for your reciprocal accounts. Let's have 12 dash, problem 13.